Hello, I am Viraj Kulkarni. I have been with Bandhan Mutual Fund for the last 9 years now. I joined in 2015. Currently, I manage our FlexiCap fund. It's a 8,000 crore fund as of now. I have taken over the fund since Feb of this year when our erstwhile fund manager Sachin left. Uh, uh, in Feb, we have come up with a new positioning for the fund wherein we are trying to make it a truly flexi fund. So we have three pillars for positioning. First is we will be very dynamic when it comes to the mid and small cap allocation. So that's the first pillar, which is a counter cyclical model based allocation to mid and small caps. We'll buy mid and small caps when markets are cheap, and we'll sell mid and small caps where markets are expensive, and we'll aim to be within a range of 20 to 50% weight in the mid and small cap part of the market as such. In bull markets, when markets are at the peak, we'll be 20% mid and small cap. In bear markets, when markets are very expensive, we'll be 50% mid and small cap. And we aim to follow that to the T as far as possible, and that dynamism we hope will give us the required alpha. The second pillar is that we want to run a balanced portfolio. We do not want any sharp skew to a particular style, either growth, value, or momentum. So in balanced, we will have a balanced mix of momentum stocks, quality stocks, and value stocks as such. How do we define momentum? All those stocks or segments wherein next 2-3 year growth is expected to be 20% plus and are seeing a strong earnings upgrade cycle. How do we define quality? Stocks with minimum ROE of 20% over a cycle, growth more than the nominal GDP growth or 13 to 15% growth plus, and are available at reasonable valuations. How do we define value? Stocks which are very cheap either versus their own trading history or with respect to peers. And we can identify some triggers which will result in value unlocking in these stocks. At any point, the portfolio will be a blend or a mix of all these three type of stocks, so that in any market cycle we don't miss out. So if it's a value rally, we are there. If it's a momentum rally, we are there. If it's a quality or a low vol market, we are there as such. What do we achieve through this? Or the third pillar is that we want consistent sustained outperformance. We do not want to either beat the market by a large margin or underperform the market by a large margin. We want to consistently beat the market by a moderate margin. We believe that consistent moderate outperformance over shorter periods eventually results in a very sharp outperformance over a long period of time. So that is the, or those are the three pillars on which we will position the fund, or we have positioned the fund as such. Next, I will give you an update of the current sectoral positioning. So currently we are overweight banks. That fits into our deep value / quality bucket. Most banks today are very cheap. Even in a supposedly bad cycle, they are generating ROEs in excess of 15-16%. Medium term growth outlook is more than the nominal GDP growth. So that perfectly fits into our quality / deep value bucket, available at reasonable valuations. So we are overweight that segment. We are also quite positive on pharma, especially the US pharma, because that is one segment where we see a chance of earnings upgrades. So it rightly fits into our momentum bucket. It's a segment which has been beaten down, but it's going through a strong earnings upgrade cycle. And we are also overweight on the consumer discretionary space. Again, that rightly fits into the strong growth 20% plus with a strong earnings momentum sort of a thought process that we have. Where we are underweight, we would be underweight IT. We believe valuations are expensive with earnings not up to the mark, so we do not want to be overweight in that segment. We are underweight industrials because we believe the valuations are excessive, though we have ownership in select pockets. In terms of large versus mid small, currently we are running around 23-24% mid and small cap, whereas the rest is invested in large caps. Our weight in the mega caps, which is the top 10 stocks in the Nifty, is very concentrated. So net, we have built a defensive portfolio. Valuations are expensive. The aim is to run a counter-cyclical allocation. So we are overweight large caps or overweight mega caps, underweight mid and small caps, overweight banks, underweight some of the frothier sectors of the market. So that is how we are positioned. How do we expect markets to pan out? Honestly, we are not building the portfolio for a big correction. We believe that there is a sharp dissonance in the market where there are few sectors which are in favor. Valuations over there are extreme. There are few sectors which are out of favor and valuations are extremely cheap. We are playing for a normalization over time where the sectors which are growing handsomely now will normalize. They will still grow, but the growth will come off. And the valuations will come off even more because they are very frothy. Whereas sectors like banks, which are still growing well, but the narrative is weak, we believe the valuations will catch up. So that is how we are positioned. We are positioned conservatively. We are not batting for a crash, but we are batting for a normalization as such. If I give you a 2-3 year view, how do we see the fund performing? As we said, we want to be consistent. We are not aiming for a sharp outperformance in any cycle. So we see that as long as the bull market continues, the fund should perform in line with the index. That is the endeavor. In a correction, we want to marginally outperform the index, wherein we go and increase our mid and small cap weights. And whenever the market recovers, we hope that our higher mid and small cap allocation will add alpha as such. So the aim is to outperform through the cycle, and this is how we see the cycle panning out or the positioning right now. So anyone who is okay with this philosophy, thought process, slightly conservative with a long-term perspective, I think this fund can potentially appeal to you as such. So that's it from my side. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.